Well, I think let me begin. I want to address three sets of issues. One is to reinforce some of the points that were made by Secretary and Ambassador on the origins of this idea and what has motivated it, and that itself, I think, provides an important kind of reinforcement or justification for this group coming together independently of the bank's actual functioning and effectiveness. The second part is the operational aspect of this new development bank and both the opportunities and the challenges that it might face. And the third, perhaps, since the question came up, what's the difference between the AIIB and the NDB, and between the two of them, will they solve the world's problems? Maybe. A number of different attributions to the intellectual foundations of the NDB. I am particularly, or my sort of entry into that debate was through Nick Stern, actually. And Nick Stern and Joe Stiglitz in 2011 got together and started to push this idea that basically arguing that the Bretton Woods structure was inimical to the interests of these countries. And in fact, when you take that back a little bit, I now believe that even if Goldman Sachs and Jim O'Neill had not brought this group together, it's quite likely that they would have emerged, perhaps not Russia so much in this, because I think perhaps Russia's entry into it was very much a Goldman Sachs creation, but the others are a natural constituency because they were all at some point either the largest global receivers of World Bank or multilateral assistance, and in South Africa's case, perhaps the largest regional one. So there was a natural alliance here in resisting the kind of conditionalities, structural and cyclical or balance of payments. And with the kind of frustration that was mounting with the resistance to changing the governance structures, even minor changes in voting shares was being resisted with such vehemence. The U.S. Congress ultimately did not accept the proposition. It would have changed China a bit. It would have changed India a bit. It would have changed Brazil a bit. It would have taken a couple of seats on the board away from Europe. It wasn't a very dramatic shift, but that was resisted, and by the U.S. I mean, Europe, of course, was resisting in any case. So I think the time was ripe for a show of force, a show of strength, and say, look, these institutions are now passé, and we don't need them anymore. We have the heft, we have the domestic, the economic muscle to operate a parallel system, if you will. And I think that's really the sort of motivation, the foundation of the NDB. The US is a major stakeholder in all of the regional banks, the ADB, and the African and the Inter-American. So they have that advantage of being able to raise money on the back of US and European and Japanese sovereign guarantees. But because these have been derated somewhat in the last couple of years. But historically that is the case. How would a group that basically is barely above the investment grade in most global rating criteria, most global rating systems, be able to raise money? That seems to have been basically sidestepped for a bit, because clearly this group is looking at that initial 50 billion and subsequently $100 billion worth of capital as a foundation which will take them to a point where perhaps if they demonstrate viability, money will come in. I think that leads us to the first significant operational challenge. This is a very, very constrained entity in terms of the kind of exposures that it can take. This is not a lot of money that it has, and it will therefore have to be extremely choosy and extremely selective about the kind of projects that it can finance. So how do you go about choosing these projects? If you had all of the countries side by side, which is one of the advantages of the AIIB, you could look at projects that that facilitate integration, say transport corridors or ports and so on, which are shared resources. Here you have the possibility of perhaps a China, Russia. The pipeline may be a project, but then that really benefits only two India, China, of course, have borders. You could look at that, but then South Africa and Brazil are geographically distant. So I think that the way in which this institution is going to prioritize projects is going to be very, very tricky process. And I think that's really going to be the first challenge moving from the capital to actual deployment of funds. They will need to have some sort of a fairly transparent agreement on what the criteria for project selection is going to be. I mean, is it going to be domestically driven interests, therefore, like any other multilateral or even private funding, or is it going to be projects that facilitate greater integration between these this group? How are you going to decide this, particularly when it comes to South Africa and Brazil? So I think that's going to be a significant challenge besides the funding itself. I think that's really something that the board and the new president will really have to focus on in the few months after this summit, because I think if they don't get an action plan on this basis in place quickly, this does have the risk, does face the risk of becoming sort of a relevant entity. If it does this successfully, I think it does emerge as not a full-blown competitor, but certainly a pressure point on Bretton Woods. I think it will then be able to push the debate on governance restructuring in the Bretton Woods institutions a little further forward, and I think that would be an important contribution. The CRA, the contingent reserve arrangement, to me is a far more pragmatic, far more practical arrangement, structure. Most of these countries, I haven't looked up the latest reserve positions of these countries, but they have between the 5 of them relatively large reserves. They face, and again, the roots of this are the Brazilian finance minister's famous, statement of currency wars in the 2010 G20 discussions. And all of them, I think, realize that willy-nilly they are vulnerable to decisions being made by the ECB, the Fed, perhaps not so much the Bank of Japan, but certainly the Fed and the ECB. And it makes sense to have some kind of collective defense mechanism to deal with these shocks. So it's very easy to think in terms of self-insurance, which is accumulate reserves, but there's a price to be paid for that. So if you can leverage that in terms of collective arrangements, you get a little bit of benefit, and I think this is a very logical step. They all have pools. They are vulnerable to different shocks. South Africa, Russia, and Brazil are commodity exporters, so they're vulnerable to a particular kind of shock. China and India are commodity importers, so they're vulnerable to a different kind of shock. They in fact offset each other. So this is almost like a natural hedge between these 5 countries when you look at external shocks. And so building an insurance framework, I think, is relatively easy and good. Now, when you look at how this worked in the aftermath of 2000 of the meltdown, the U.S. Fed actually had 4 bilateral swap lines with other countries. I think Korea would have been the one closest to this group. But has since then refused to enter into any further swap lines, bilateral swap lines, on the grounds that the Congress would not mandate it, which may be correct. But it really puts countries like India into a rather difficult situation, because most of the shocks that India is vulnerable to actually emanating from the US, and you've been seeing Governor Rajan's repeated assertion of this. This unfairness that what the Fed does is affecting all of the emerging economies adversely, and this is not the kind of, it's almost like a beggar thy neighbor kind of approach that he's arguing about. I mean, you may agree or disagree with that characterization, but the fact is that if you don't have a coordinated sort of financial and monetary framework, this kind of transmission of shocks and its adverse impact on countries like India, I think, is a very real threat. So this does provide us a buffer. The third point I wanted to make was, why is this not moved forward as fast as the AIIB? And it's clearly a governance issue to me. It's this is I think I disagree with the characterization that China has more of a vote. It doesn't. On paper, it is one country, one vote. Consensus is always is a horribly inconvenient kind of collective choice rule, decision-making rule. One vote, one share, one vote is a much more tractable kind of arrangement. In the AIIB, you're going to have China with about 30% share, India with about 10 or 12% share. So it's very easy for 3 or 4 countries to get a majority. Japan may come in; it has so far resisted, but with 4 or 5 relatively large economies who will be either big funders or big borrowers. So I think as a sort of operating organization, AIIB offers a little more flexibility, a little more maneuverability. Control is perhaps a little easier, and also because it's geographically focused. Everybody wants to. Britain has joined it. Other countries have joined it, but they are joining that with as a business proposition, not as potential borrowers, and that I think gives it a little more heft. But I don't see these two institutions as being in conflict or in contradiction. I think they both reflect this very, very fundamental force, which is that the collective frustration with Bretton Woods structures is mounting, is growing, and I think the most concrete manifestation of that is there's a very widespread feeling amongst the emerging economies that if Greece had not been in Europe, had not been part of the euro, the IMF would not have given it the 5-year window that it has. We're seeing today is a very significant day, but keep in mind that the Greek crisis Greece first imploded in 2010. There is no other program that the IMF has been part of that has given the country such a long, period of time to adjust. And I think that suggests that right from the Asian crisis, when the Asian economies decided to disengage from the IMF, build up their reserves, build up their self-insurance, that the sort of Bretton Woods uneasiness has been there, and certainly in the post-2008 crisis has been mounting. So these two actually are creating these alternative pathways, and great if they succeed, one of them succeeds, both of them succeeds, but that challenge is on.